Malcolm Garvey, Huey,
It's Gangsta
Malcolm
Grills,
Garvey,
Gangsta
Huey.
Grills,
Their life is like a movie.
I
I die, I organize. Everything I do's revolutionize. I build what's good for the whole damn hood. Study G's like these, really think you should.
Checkmate 007 come back at y'all, man. Look, time to get into it, man. I said I was going to make this for my Facebook, Instagram. We're going to have to get it too. We're going to talk about some of the mishaps I see in investing in the black community, man. I'm so happy y'all investing, man. It's definitely going to make a difference in the generation to come. But I'm seeing a lot of beginner mistakes that I just want to point out. A lot of y'all investing in stocks, but are looking for quick returns. This is not a good move for a lot of reasons. We're going to break it down. When you invest, investing is a long-term goal. Most of your investments start at like a year and go all the way up to like 10. So the ideal of investing for a quick return isn't really realistic for stocks. Stocks don't do like big gains and losses unless you are day trading or trading on like gains and losses. They hold stocks for very little time. This is also very prominent in the penny stock game. Now, one of the reasons why I'm pointing this out is y'all buying like these really expensive stocks, and y'all might be buying somewhere between like 1 and 10 of them. And this is not a good move for like growth in a sense of quick returns. See, when the rich buy, they buy a lot of stock at a time. They might buy a couple thousand. Easy for them. They have that kind of money sitting around. You have to invest at your level. And I'm going to get into a video about budgeting later. But when you invest in stock, you want to buy stock generally that you can get a lot of for a little bit. So if it does a little bit of gain, you will get a lot of money. Let's say you get a stock for about $1. And let's say you put $50 into it. And it goes up by, let's just keep the numbers real simple. Let's say it go up 50 cents. Well, you gain 50% off the buy. So you put $50 in, it's now worth 75. So you can take it out and you've already made half your investment. This is more penny stock trading. You want to stay low so your ratio of growth is higher. You can't buy a $300 stock and expect it to go up $2 and you only bought 2 of them. $4 of profit. This isn't a good move, and I don't think we're thinking in sense of growth. When most companies buy expensive stocks, they're buying them for either the long-term investment for the portfolio, which is just a collection of assets that they're accumulating, no different than like a portfolio of paintings. They expect all those assets to go up. So they expect most stocks to pay out dividends, which are paid either quarterly, annually, or semi-annually. Dividends are like pennies off the stock that they pay to stockholders for keeping the stock. And that's what most of these long-term companies bet on. Since they own so much of these stocks, when they cut a dividend, they see a nice check. And this goes to why a lot of people a lot of what y'all doing is building a fund of stocks, which is very similar to a portfolio, which is a collection of assets. But y'all are looking for quick turnarounds on your money. You want a short ROI, return on investment. But with these investments, they're usually long-term investments. So with that being said, when I was talking about a fund, your safest bet is a mutual fund and specifically an index fund. ETF is nice, but I don't like ETFs for the fact that a lot of people get the scratchy feeling because they overtrade in their ETFs. They're very similar for that reason. Let's see, they both are projecting average of about 8% growth. If y'all watch my Rule of 72 video, you know that's every 9 years your money should double. Now these are all perfect world scenarios. But the stock market just had its best August in the last like 24 years, since 1986. This is the best August they've had since 1986. So the stock market is always a good bet. When it go all the way down, it's going to come back up. It always do. We got to go up and down. It creates volatility. People lose money, people gain money. You want to be the ones that gain. But back to the fund. I suggest a lot of black people, as a financial advisor, I suggest a lot of black people invest in an index fund or ETF if you want to be more hands-on, for the fact that you have a professional managing your money for you with relatively low cost. A lot of us don't have the time, patience, or know-how to actually maintain our funds that we're building by accident or our portfolios. So I believe this is the way we should be going first, to first get through our 20s a little bit. Because a lot of us in our 20s are working pretty hard. And then once we start breaking down and having a little more time to ourselves to really focus on our financial wealth and well-being and our net worth, because a lot of us have negative net worth, myself included. It just makes fundamental sense. A lot of us are putting too much energy that won't come back. So unless you're prepared to do day trading or watch the market really hard, you're better off putting your money to a professional to deal with it and come back when you have the time to actively manage your own investments. Now, with that saying, there's a couple websites I love Boyce Watkins, if you follow him. He got the blackbusinessschool.com. He got a course on there. Black Money 102. Supposed to be a 14-day free trial, 30-day money-back guarantee. He guaranteed. He also has firstshareofstock.com. Firstshareofstock.com. I suggest you look into any one of them if you want to get more proficient with, I guess, stock know-how targeted towards black people. But I want y'all to understand, like, the best way I can. The first thing we need to understand is investing is long-term. If you want short-term gains, you may want to look into the Forex or day trading. And if you're day trading, I would stay more towards penny stocks. I'm going to expand on some concepts going forward. Portfolio management, fund management, different funds. Definitely going to talk a lot about a lot of different subjects coming up. So, look forward to them. I'm going to break down stocks. I'm not really into bonds, but I may touch on them at a later date. Options and futures, they start to get more and more complicated. But if I do ever start like a group for learning these concepts, I'll be more than happy to let y'all know. Make sure you check me out on YouTube, Mr.Checkmate 007. Check me out on Instagram, Mr.Checkmate 007. If you got me on Facebook, you already know. But I'm out, man. I appreciate y'all waiting on it, man. I'm going to tag everybody I said I was going to tag. You know what I'm saying? And we call that a checkmate.